My name is Shawn Khunkhun. I am the CEO of Dolly Varden Silver. Dolly Varden is an advanced exploration company in BC's prolific Golden Triangle. We've assembled a very large, very strategic land package that includes 5 past-producing high-grade silver mines.
Shawn, good to have you on the show, actually. We've had Rob a couple of times, but it's nice to see you join us. Look, we've not met or spoken before. Can we just kick off and maybe get a bit of background on yourself? Where have you been? What have you done?
Yeah, absolutely. Look, I've been in the mining industry for 22 years, so half of my life has been spent helping companies through exploration, through development, through production. I currently reside in the Fiore Group offices. So Dolly Varden is a tenant within the Fiore Group. My business partner is a very successful entrepreneur, Frank Justra. In addition to myself and Frank, we have about 75 people who are engineers, geologists, finance professionals. It's a very talented, young, motivated group of executives who have the experience, but also have the energy to move projects forward. So, I have got a lot of passion for this industry. I sit on boards that are public companies, but also advocacy groups, groups like the BC Regional Mining Alliance, which brings the Indigenous communities, the BC government, and corporations together to promote the industry, to promote the metal, to promote mining. And look, I've just got a real passion for the business. And I've been very, very lucky that I've worked with some talented people, and we've gone behind some really good projects.
Now, tell me a little bit about what you're trying to build here. I saw the advisory group. I've seen the board. It's like you say, these are heavy hitters, and the resource of in the Fiore Group as well. What are you trying to build? I know you're a silver company, but what are you trying to build here?
You have to go back and understand me a little bit in terms of my experience. So again, born in Canada, born in Vancouver, to 2 immigrant parents who came over from India in their early 20s. And so if you go back to my family, it's a family of farmers. And when they had a good harvest, they would expand the farm or they would buy gold. So that's the history that I came from. And so growing up, being educated here, I wasn't taught that financial history of gold. I didn't understand gold's role in the monetary system. And but having just coming into this industry in my early 20s, going to conferences all over the world, listening to speakers like Rick Rule and others, it's really hit me that what my family had been doing for generations was something that I could build on that legacy. And so I found myself at 22 in a role with a startup gold company. The company had bought a mine from a South African miner who was looking to leave Canada at a time where the gold price was about to go from 300 to 1900. So during that journey, it was a 6.5-year journey, I helped build a company that went from inception to $1.4 billion market cap. I helped facilitate $500 million in financings to bring that mining operation into production. And we peaked at producing just under 85,000 ounces a year of gold. Through contractors and employees, we had about 600 people at site. We were one of the most important businesses in that province, the province of Manitoba, which is located in the center of Canada. Through that experience, I really caught the bug for the industry, but I was more than an employee and more than an entrepreneur and more than a company builder. I started becoming an investor. And Matthew, I made more money investing in silver in 6 months than I did building that gold mining company in 6 years. So my takeaway from that experience was the next time I thought we were going to enter a moment in time where precious metals were going to become relevant, I should probably get exposure to silver. So that journey for me started in 2004, ended in 2011. I focused on base metals in the maritime provinces in Canada from 2012 to about 2014. I came back to the gold industry in 2014 in the Urban Berry camp, where Cisco has recently sold their project to Goldfields. And in that camp, I watched a company that I helped move forward go from a $500,000 market cap to 100 million inside of 18 months. And so, like I said, I found myself, Matthew, in the right place at the right time with the right people a couple of times throughout history. I've been very lucky. I've just surrounded myself with some really talented scientists, really talented mind builders, and I deliberately sought out a silver opportunity, and I started that journey in 2018, which led me to Dolly Varden in 2019, which led me to coming on as the CEO of Dolly Varden in February of 2020.
Luck is one thing. Putting yourself in a position to be lucky is another. Okay, so I think that you've got to basically pick the right asset, and yes, surround yourself with clever people, but you also got to build and construct the company in a certain way, and that starts with the business plan. So back to my question specifically on Dolly Varden, which is, what did you set out to build?
So it's interesting. And again, I say this to my kids often. This is my first time at this, right? So I'm going to make mistakes. Like, this is my first time at life, right? And so I got to give a lot of credit to the people that stood shoulder to shoulder with me, that taught me how to come up with a plan, how to construct a vision, how to execute a strategy. These were things that I wasn't born with. These are things I've learned over time. And I'm going to give a lot of credit to my friend and fellow director, Robert McLeod. I was in a boardroom in December of 2019, and we had a strategy session of, should we take over the management and the board of directors of Dolly Varden Silver? And if we do, what are we going to do? And we flew experts in from all over the country to have the strategy session, finance professionals, geologists, and we said, okay, well, what are we going to do here? What is the plan? And what I saw, what ultimately gave me the confidence to move forward, is I saw a undervalued, rare silver asset in a safe jurisdiction. So Dolly Varden at the time was trading at 37.5 cents and silver ounce in the ground, and the peer average at the time, Matthew, was 75. So it was trading at half the value of its peers. It had past producing mines, it had access to incredible infrastructure, and it seemed to be at the epicenter of a very important underexplored geological district. And you had at the time a company called Oren Resources with the Homestake deposit at the north, and you had Hecla to the east. And I just thought to myself, there should be one owner of this district, and we could play a role in the consolidation of this district.
So that was, I guess, two things going on there. You saw pure play silver and scale. Let's go to the kind of pure play, because most silver in the world is created as a byproduct, right? So it kind of creates a very a market that's been hard to read for a long time, and it's kind of got this obviously wonderful relationship with gold price and so forth. So as a newbie into the kind of silver space, it's hard to read. So why do pure play silver companies get this sorts of valuations we've seen over the last 18 months in the marketplace?
It's a really good question, and I think what you really need to understand is what's going on in the silver market today. Where do we get our silver? How do we get our silver? And you're absolutely right. Only 1 out of 4 silver ounces comes from a pure silver mine. Now, why is that important? If for whatever reason the world said, I need more silver, it's very, very difficult to go to the copper miner whose interest is the copper that's spitting out the silver as a byproduct and say you need to increase your production. So having the pure, the fact that only 25% of the world comes from pure silver mines is really interesting. And if we even go a step further and examine where most of those mines are and how deep they are and how capital intensive it is to increase the throughput, there's a very interesting conversation. But let's just set the background for the audience. For the last 5 years, we've been in deficit. So, and you really need to go back actually 100 years. So if you go back 100 years, 10% of silver demand was taken up by industry. Okay, so 90% of the demand for silver was for the same demand that gold sees. It's a hedge against inflation. It's seen as a store of value, right? It has acted as money for 5,000 years. So but what's happened in the last century is industry has come into the market and is now consuming half of the silver that we're mining and recycling. So we're mining about 850 million ounces a year. We're recycling another 150. It's a 1 billion ounce market that we can give to market. Okay, but the demand consistently over the last 5 years has been in excess of about 200 million ounces of that per annum. Okay, and so we're faced in a situation right now where industry is wanting more and more and more of this metal. But historically, whether you're a speculator or you're an investor, people come into the silver space, myself included, for the moments where you enter a precious metals bull market and silver outperforms gold. It has in every previous precious metals bull market. The difference this time is industries coming for 50% of what we produce.
50%. That's okay. Obviously, significant change over time. Is that? I think predominantly people talk about solar panel usage as the kind of key driver of that increase. Is that sustainable? Do you feel confident that is sustainable? Do you also acknowledge or think that things like geopolitical uncertainty is driving this, and and also people's perception of fiat currency? There seems to be a confluence of a lot of different factors. Inflation I'll throw in there. Do you see silver continuing to move, and will it start to move more in the next few years?
I constantly seek out opinions that contradict ones that I hold dear. And a few years ago, I was looking for reasons why I should not be in gold. Despite the 99 reasons I should be in gold, I was looking for reasons I shouldn't, and I couldn't find them. And I find myself in that same place right now with silver, where, look, the reality is in 2025, photovoltaic demand is lower today than it was in 2024. Yet the price has moved up. And so for me, it's not one input, because when one input decreases, Samsung comes out with a kilo silver battery that charges your car in under 10 minutes and gives you a range of 600 miles. So, and wants to mass produce that battery. And so my point here is ultimately, I think you're in a situation where even if industries, and it's upticking every year, but a small decrease in photovoltaic demand, solar demand, is not going to offset the rise in silver. So to simply answer your question, we're seeing things in the world right now, whether it's, and I go back to history, right? I go back to history, silver's role throughout history, right? And again, you go back 400 years, the wealthiest man on the planet was the Emperor of China, 400 years ago. And the reason for that is he started taxing his citizens in silver. And I think that if you look at where the demand is coming from today, it's not necessarily focused in the West. It's coming out of Russia. It's coming out of India. It's coming out of China. I don't see that slowing down.
Well, let's talk about the geopolitical component here, which I mentioned a second ago. Emily's gone. Mexico seems to be freeing up. Do you think that's going to, bring a whole swathe of production into the market? Peru, obviously, recently went through that. A big producer, and as you mentioned, China perhaps going the other way and shutting up shop with regards to their reaction to tariffs, etc. So, how do you see the geopolitics playing out, and what does that do for supply? And coming back to the key point here, which is, why do pure play companies seem to achieve, higher multiples?
Well, I think the most problematic issue in silver today is what's happened happening in Mexico, right? So you have a situation in Mexico where Mexico is the number one silver producing nation on the planet. 70% of Mexican silver comes from open pit operations. And what we've seen through the last two administrations in Mexico is a reluctance to permit new open pit operations. So I think we're in a spot right now where if we don't get some of these large projects permitted, and we're already in deficit, so I'm hoping that the Sheinbaum administration starts to allow some of these larger open pit projects to move forward, because if they don't, we're going to find ourselves in a situation that's very, very problematic. And so, I look at what's happening in what made Mexico, Peru such competitive jurisdictions in the past. As those countries start to bring up their environmental regulations, and we're starting to see wages and unions rise in those jurisdictions, it's that competitive edge of the lower costs in those jurisdictions is going away, and it's taking longer to permit mines. So, I think if those don't get resolved, it could be quite problematic. So for me, the strategy that I've taken on is to focus, despite me being really bullish on the price of silver. My whole career, Matthew, I've focused on safe jurisdictions. I've focused on high-grade projects, and I've focused in areas where there's a long history. Like, what I learned when I came into the industry 20 years ago is that focus on brownfield areas. Focus on areas like I'm in an area in Northwest BC where production has been ongoing since the 1890s. There's nothing but mining up there. And so I've got communities where they have 85% unemployment, where they're saying, get to work, get this fast track, get into production, let's go already. And I want to go, and simply put, I want to be wanted. I don't want to try to bring a project forward in a community or an area that's not wanted.
I'm going to stick with the macro a little bit longer.
Okay.
Though, and we're going to come to the company proper in a second. So I'm finding this a bit fascinating because I always like to know, what is the guy thinking about that drives, for me, that drives the success of the company. Each decision that's made is the ability to.
I'm going to jump in. Jump. Okay. We're in an environment right now where there are 10 primary silver producers. And, Matthew, one of the things you're known for in our industry is you ask the tough questions, right? So if you had those 10 CEOs on of the 10 primary producers, you could poke at them and you could say, wait a minute, only 28% of your production comes from silver. Are you really a primary silver producer? And so my point in this is what I've identified is there's 10 co's that produce this stuff. 10. And there's an opportunity for a new player, a new participant. And so I have the audacity to believe that Dolly Varden, and I sounded crazy 5 years ago because we were a $20 million co that had no money in the bank, right? Today, we're a little bit more respectable. We're flirting with a $500 million valuation. We've got $50 million in cash. We've actually positioned ourselves as a top 13 silver equity. My goal is, I think what the market's looking for, what the market needs, is a go-to name to own in silver. And what I want to create, what my ultimate vision is to create the next Pan American, to create the next Hecla, to create the next Coeur. And what I've had to really pick my spot and be patient, because to undertake that amount of growth when you're a $20 million company, when my ultimate fiduciary duty is ROI for my shareholders, right? So I've had to be very disciplined in when I raise the $150 million I've raised, in order to, what I can say to my shareholders today is, you're up 550% since launch. And in order to be able to execute that, you have to be disciplined. But then there's moments where your vision, in the month of May, we did not one, not two, but 3 acquisitions in 1 month. Why? Then the why is, and we are going to be really accelerating our next phase of growth. It's about building appropriately, playing from a place of strength. Matthew, I have no other hobbies. This is all I do. So, and I've surrounded myself with company builders and entrepreneurs and scientists that have been very successful at doing this throughout their career. And we're trying to execute a very important business plan right now, which is to try to create a top 10 silver entity. We've come from obscurity. We're getting close, but we're just about to fulfill that vision.
Okay, we got there. That's the vision. That's what I was asking. That's where I wanted to get to. Look, you're saying that the market hasn't adequately priced in silver's long-term fundamentals. You're saying that silver has been volatile, and you've been able to perform in that volatility. Because it will have affected your ability to get financing and investment interest you along with everyone else. So, given that you've got to where you are today, you are. You said your stock is up 550%. Shareholders have done quite well. These acquisitions are, what do they actually do for you? How do you phase them in? How do you integrate them? And how's that work towards delivering your vision? It's just the beginning by the sounds of it.
Yeah, look, I believe in the area. You have to understand what it is we're doing and why we're doing it, where we're doing it. This is an area that you have to really understand the Golden Triangle. So we're in Canada, stable, safe, clean air, clean energy, same for me, same time zone, same language, same currency, easy to operate, right? I know the laws. You've got a province that is, the economy is just contracted, right? Totally contracted. Without mining, there's not a lot happening in British Columbia. And so that's the backdrop. But geologically, the richest 20 kilometers on planet Earth for silver and gold are here. Like that's a statement. The richest 20 kilometers on planet Earth are here. And so and I'm not going to get into it, but it was a 7 million year mineralizing event that created that geological opportunity. But because it's nestled on the border of Alaska, right? It was an area that's hard to get to. So unlike other parts of Canada, like throughout Ontario or Quebec, where an area that we refer to as the Abitibi, where we've pulled 200 million ounces of gold out of the ground. This is an area that for 100 years, from 1890 to 1990, there was only 5 million ounces discovered, despite this being more geologically significant. Now, since we've brought in the roads, since we've brought in the power, since we've had the settlement treaties with indigenous peoples, with government support, with metal prices rising, with glaciers melting, all the things that have occurred over the last 3 decades, That 5 million ounces that took a century to find has now gone into 150 million ounces in 3 decades. And so where Dolly Varden is we're just south of that, in the most underexplored part of the prolific Golden Triangle, south of Newmont, a top 3 global precious metals producer. So we're in the shadow of Newmont's headframe. Okay, we've assembled a land package that we've grown by 6 times since May. Okay, that's rapid growth, but it's not just growth for the sake of growth. It's past producing mines. We have 5 past producing. We have resources. It's the right geology. It's the Jurassic Age Hazelton Suite, and what makes this part of the triangle so interesting for me is, we're in the mountains of BC. So, there's mountains. Where Dolly Varden's package is we're nestled in a valley. We've got infrastructure. We've got tidewater. We've got a road. We've got power that comes just south of the property. So all the components you need to help in the economics of a project. But ultimately, what we're trying to do, okay, a great example, Discovery Silver. Discovery Silver, Tony McCooch bought a project from Newmont, and it's had a exponential growth for his share price and for his shareholders since he made the purchase. My point here is what one company's project that may be non-core could be a company building project for a company like Dolly Varden. So we want to be in this district. We want to continue to grow and utilize opportunities that are around us, that are contiguous. And we see a path if we're patient. And if we're not, like I always say this to my shareholders, don't think about a 4-year election cycle. Okay, that's how we're programmed here in the West. Let's think about, I'm telling you, the big companies are planning for the next decade and sometimes century. And that's how we have to think. That's how we're going to be successful. We're not here to make money. We're here to create wealth. And there's a difference. This is not a trade. This is an investment.
Okay. The acquisitions are good from the point of view, it gives you optionality. I'm assuming, we won't get into the weeds today because this could go on for 4 hours, I suspect, which I'd love to do, but I imagine that the listeners might.
Matthew, we for 3% dilution.
Yeah.
For 3% dilution, we grew by 6,000%.
Right. Okay. Which sounds good. I like to hear it. I want to know more. In the same breath, I'm interested in how you integrate that, how that changes your plans, how it changes your allocation of capital. Large land packages come with large liabilities in terms of expenditure, etc. Can you stomach that? Can you finance that? And what does that do for exploration programs? Because there's a lot to get after.
Yeah.
Because you got a lot of land package.
So I sadly have had few original ideas. A lot of what I'm doing today is I'm being serious. I'm going to show you something. 2002, and so there's I'm telling you, there's a company that's been very successful in the district, Skeena Resources. Okay, or Skeena Gold and Silver, as they're now known. And Skeena has built a $2 billion company on reawakening the past treasures of the Golden Triangle. They didn't start with Eskay Creek, but they're finishing with it, right? And my point to you is our focus right now is on our original land package that we had going into the season, okay? And what you're going to see me do at the appropriate time is you're going to start seeing us have ways to work the other claims through partnerships, through divestments, which will create marketable securities. And what I've seen in this business is, in order to be successful, you need to focus. And this is a very capital intensive industry. And so what you have to appreciate is most of the acquisitions we made are contiguous. So the assessment credits, the $100 million of banked assessment credits, can be applied to keep the projects in good standing. And for those projects that aren't contiguous, that will require some spend in, say, a decade, because some of them were inherited with bank assessment credits, we will divest and joint venture.
Okay, makes sense. Makes sense. It's just sometimes people get excited and carried away, and they're looking at the opportunity rather than the realities of running a business. I'm hearing conservative, considered approach to this. You've taken the opportunity. You will dissect it and work out how to fund or monetize or create value. I get that. Just in terms of the things, and again, that's a conversation we can spend a lot of time on another time as well. In terms of what you're in control of now, focused, you talk about a focused approach, drilling this year. It was a big drill program. You made it bigger. Why?
It's something that we've done consistently for the last 5 seasons, where we have a pretty extensive, intensive process where we rank targets, and I come from a world where it's all about ROI, right? So, and that's a tough thing to apply to exploration. It really is, right? Especially when you're trying to make a discovery. So the long story short here is we've expanded the drill program because we've found ways to cost effectively explore. So the headline number is we're drilling 55,000 meters, which sounds like a significant amount of drilling. However, technically we're only drilling about 40,000 meters. And the way we're calculating that is we are leveraging a method called directional drilling. So you drill a mother hole. Not a lot of mining companies use this method. This is something used in oil and gas. So you drill a mother hole, and then you don't need to drill that first bit that you've drilled. You fan out 3 daughter holes, not having to drill that first bit. And what it does 2 things. It saves money, but you're actually able to hit your target with precision. And so it's expanded. However, it's not as big as you think it is, number one. Number two, it's all results driven. It's all data driven. So, we like what we're seeing. And so we come into every program very conservative. When we allocated the 35,000 meters before we started drilling on May 15th, it was priority 1 targets only. And then because of the fact that, we're on time, we're on budget, and we're having success, and because the market's moved and we're trading at all-time highs, and we did a top-up on our financing where we brought in some more dollars, investors did not give me that money to make 5% on their money. They gave me money to try to swing, and so that's what we're doing. We're listening to our shareholders, but we're doing it surgically, and we're doing it methodically, and we're doing it through expansion and extension with a component of discovery.
So how do you justify that logic with things like big bulk and homestake? We've got gold and copper being introduced to the mix here. So is that what they also bought into?
So that's a great question. And so a couple of years ago, I was with the then CEO of Hecla. They've gone through a management change, but I was discussing acquiring big bulk at the time. We didn't own 100% of it. We owned half of the deposit, and the other half we acquired in December of 2023. So what I like to do when I have an idea, again, going back to my kids say, Shawn, you're Dad, you're the CEO, you're the boss. No, I work for the board, and the board works for the shareholders. So I like to canvass the shareholders. I like to canvass Eric Sprott. I like to canvass and say, okay, this is what I'm thinking. This is what I'm seeing. This is what I want to do. Do you support this? So 2 years ago, with Phil Baker, who was the CEO of Hecla, And I said, Phil, listen, there's this copper gold porphyry. I got really good terms on it. We can get it for, it was, it was about 275,000 shares, which at the time had a $200,000 valuation. I can get this option assigned for 200,000. I've been monitoring this opportunity for 4 years. I think we should go for it. What do you think? But it's not silver centric. It's this copper gold porphyry. And I said, the reason I want to get it is there's two reasons. Number one, going back to my original vision of one owner of the geological formation. We need to consolidate that. If that's the feeder to all the high-grade silver and gold, when someone comes in to mine this operation in the future, whether it's us or another entity, it's important to lock up all the ownership, number one. Number two, there could be a very significant, because we know it's a fertile gold copper porphyry because of the work that was done in the past by Anglo in 2009, there's a very, very potential, very large economic prize there. And, listen, at the end of the day, what drives the value of the company is going to be the economics. And so our approach is this. We're taking 4% of our budget, and we're taking a calculated shot. Our core business is silver, but if we can tag a monster feeder system that's analogous to Red Chris, like when Newmont operates in the Golden Triangle, they're not just operating, Newmont's known as a gold producer, right? And they're operating Brucejack, which is a phenomenal gold mine, but they're also operating the Red Chris, which is gold copper. And so my point here is it's a calculated risk. It's 4% of the exploration budget. The prize is huge. We'll take the swing, but our core business, we had four rigs at the Wolf Vein drilling out the high-grade silver. We're going to move 2 rigs up to Homestake. We'll keep 2. We're going to move 2 rigs up to Homestake. We'll keep 2 rigs on the silver. So we'll drill silver gold. We'll drill silver. We'll take 1 rig and drill a few holes into this large system.
So you've got a core business, which is the silver, right? But you've also, as an explorer, got to evolve. So there's going to be a core silver business too. I think there's going to be an expectation that you can't sort of cozy up to being an explorer forever. You're going to have to get put something together, wrap some economics around it, and show that what this thing is. That unfortunately is a side effect of being quite a boring phase for a lot of investors as well. So how do you mix and marry up all of the different types of narratives and stories that you're going to have to manage financially, but also into the market?
So the Lassonde curve is a real thing, and I think what I've learned early in my career is that going back to where I started, we had this advanced explorer turned developer turned producer. And, what made us successful is we had 2 arms of the business. We really had 3, but 2 arms that we really publicly focused on, which was the discoveries, the ongoing growth, and the production. So where I see the Dolly Varden project fall within a company is as a pipeline project, right? So how do we accomplish that? Well, we could sell the project to a larger entity that's producing, that continues to advance, develop this, and get this into production in the future. Or we can marry ourselves with an existing smaller producer, more of a merger of equals, and then we've got the cash flow. So look, for me, at the end of the day, it's very, very, very simple. First of all, I think the best ROI for investors is the drill bit, if you're successful, because trying to buy ounces is an expensive proposition for most companies. What we demonstrated in May is we're very lucky. We took our $2 an ounce in situ valuation and we bought the Porter, Idaho deposit for 8.5 cents. It was a creative transaction. We were very lucky. I don't expect to be that lucky going forward. So my point to you here is, it's all about growth. So if we can continue to add, how do we get valued? You either get valued based on what you're producing or what you have in the ground. And if you have a way of finding more cost effectively, if your discovery cost is low, ultimately miners mine. Miners are going to need this project to replace the mineral inventory. So for me, as long as we keep like you look at a great, and this is like the textbook exploration example, but Great Bear Resources. Okay, pre-resource, $1.8 billion takeover, stock went from 15 cents to $30. They created a lot of value without producing an ounce of gold. And so I respect the exploration side of the business, but I'm also a businessman who, if there are I'm always looking for accretive acquisitions. We've made 5 since I've been at the helm in 5 years. We've made 5 significant acquisitions. And really what I'm trying to do in terms of, you talked about your vision, well, how do you execute that? What's your strategy to execute that? Well, grow that mineral inventory through the drill bit, through the boardroom, and ultimately, as we continue to de-risk our project and show that we have an economic project, again, whether we get taken over, whether we merge with a peer, where I'd like to see the asset is in a pipeline of other projects. And I want to continue to advance. But if I were to dream, allow me to dream for a moment, there's a couple of assets in the district that I'd like to own. And, whether they become non-core for those who own them or they become distressed, I think there's some wonderful opportunities to continue to grow in the area that we know, where we've built the relationship with the indigenous people, the Nisga'a and the Top-10. And so allow us to flex our competitive advantage, which we know the North. We've got people that are working with us that were there in 1980 when Snip was discovered. We've got people here where the famous mines are named after their family members, like Bruce Jack. And so let us operate here. We know it best. And let's continue to build the business here. But, what I would love to see is a Dolly Varden in the future that, regardless of how that cash flow is generated, but use that cash flow, whether it's gold and silver cash flow, whether it's copper, gold, and silver cash flow, to continue to increase that silver inventory, to give investors exposure to that. That's the goal. I want to create a co that has the biggest reserves, the most production, and that's a vision that's really difficult to execute when you're a $20 million company. It's becoming palatable as we start to move up onto the New York Stock Exchange, where we're getting the liquidity, we're starting to get the treasury, we have the team that can support that, and I think we've got a world-class project that'll bring us to a value to execute that business model.
Biggest resource, and you want production, and you literally started answering the next question, which was, having now listed on the NYSE, that's not cheap. So you've done that with the full expectation there's institutional money that you're going to get access to. What do they want to see? Did their needs align with your vision of what you want to create?
Absolutely, 100%. 3 years ago, I was at an investment conference in Florida, and I watched Peter Groskopf get up in front of a room and address the room, and he talked about how when he took over, when Eric retired and he took over Sprott, the peak AUM for Sprott was $4 billion, and it had dropped to $2 billion assets under management. The business, when he gave the speech 3 years ago, was $32 billion. I'm sure it's a lot bigger today. Over 100% of that growth came from the U.S. So as you had Canadians redeeming, withdrawing, the U.S. investors stepped in, and they saw, and the business has never been bigger. So we got ourselves, like, what you don't want to do when you're a small Explore Co is make that move too early. And, the costs are heavy. The time it's a big commitment. There's whether it's insurance, whether it's legal, there's a lot of things to consider there. And so I made the move when I thought it could be sustained. We used the 40% bump from the listing to make the acquisitions all shares, so they weren't very dilutive. And then on the back of that, we financed. And so we're early up into the experiment, and but it's so far so good. I think it works if we work it, and we can't stop working.
Shawn, very insightful session. I have to say, I thoroughly enjoyed all of that, and appreciate the overview of the company and the thinking and the logic behind how you've created what you created and where you want to go as well. So, do stay in touch with us. We'd love to see how things progress with the company, and not least of all, the drilling that's going on at the moment. Appreciate your time. Thank you.
Thank you very much.